What's going on, guys? It is June 12th, 2021, and I finally hit 6 figures in my TD Ameritrade account. Now, obviously, just like any good finance YouTuber, you post about this stuff online for everyone to see your investment portfolio. A lot of people would say you're crazy for doing it, but I have a very strong belief that if you are coming to YouTube to learn about finance and the stock market, you need to know how credible these people are. Do they have a Robinhood account with only $1,200 in it, or are they someone that actually has a decent chunk of change and they know what they're talking about? Now, I'm not trying to sound cocky here, but I think I know at least a little bit where you can learn a few things, or at least you guys have told me in the past that you do appreciate my videos. So now it's time to review my account. I'm going to go over every single position that I have, which is only 14 stocks. How I think they're going to do in the future, and what my plans are to make it to my next milestone, which will be $1 million. So here it is, $100,000 between the 14 positions that I have. If you guys have watched any of my previous videos, you already know the positions that I have, and you know that my strategy is just stick with the companies that I know and continue to add to them through dollar cost average. If we look right here, here's the chart. I mean, a year ago, I had 50,000. So within a year, 365 days, I was able to double it. It wasn't just through stock appreciation, it was me throwing a lot of money into the market. Now, in case you don't know me, or if this is the first time you're watching one of my videos, I'm 25, just about to turn 26, 2 days out from recording, so I'll be 26 before you guys watch this video, but my goal was to hit that $100,000 mark by the age of 25. So, in my books, I did it with 2 days to spare when I turned 26. My goal now, I guess my short-term goal, my long-term goal, which maybe in 10 years I'd like to have $1 million. Short-term goal, before I'm 30, I'd like to have $250,000, $250,000. I think that's a pretty reasonable goal, and it will push me a little bit, but I believe I could reach that. But enough about that. Let's dive in to the computer, and I'm going to show you every single position I have, and we're going to review my portfolio. And again, guys, I'm not doing this to brag or anything. I'm doing this so you can make a decision if you want to learn from me. You're seeing, I'm showing all my cards. I'm showing you what I have, how I've done, so then you can determine, you know what, this guy knows what he's talking about. I should be able to learn something from him. Or maybe you look at it and say, you know what, this guy sucks. I don't want to learn from him. Dislike, unsubscribe. All up to you, but here's my account on the computer. There we go, $100,627.64. You can see I do have $8,000 or almost $8,000 sitting in cash. The rest is across my 14 positions. We're gonna go rapid fire, just one at a time, what I think of each stock. And I'm actually gonna jump over to Google Finance to show you each of them. So I have all of them laid out. It's going to be hopefully, not the longest video, maybe 10 or 15 minutes. That's my goal. So let's get started. PayPal, one of my favorite stocks, probably my favorite stock. I have 49 shares. Market value is $13,000. My total gain is 170%, $8,000. So I only had my cost. My cost was $4,900. And now my gain is $8,000. That leaves me with $13,000. It is my biggest position, obviously, sitting at about, I think, like 14% of my portfolio. But here's the chart. If we go 5 years out, that's pretty much when I first bought it back in late 2017, around that $60 range. If we go down, beautiful stock. I love it. Not only is its revenue increasing every single year, but it is beautifully growing its earnings as well. This is exactly what I want to see. They have a decent amount of cash on hand, $5 billion. I do think we're going to be hitting a recession soon, but what do I know? I'm not a bear, I'm more of a bull when it comes to the market overall, but everything seems a little too inflated. I want to see companies with a decent amount of cash on hand and not a lot of debt. Sucks that we can't see the debt to equity ratio, right? Yeah, there's no debt to equity ratio on Google Finance, so can't show you that, but that's one thing that I really like to look at. Next stock is Shopify. So Shopify was kind of my bet where I didn't know what I was doing. I just liked the company. Awful company back then, but because of the coronavirus, it really turned out to be a great company. We go back, I also bought this late 2017 for right there. Actually, it was right at 2018. $112 was my first buy. Bought 3 shares. Wish I bought more. It's now $1,200. If we go down, look at this. Let's go annually. When I bought it, I mean, it was losing money. So it wasn't a great stock. It was me being uneducated, but it paid off. Pure luck, absolute pure luck. But check out 2020 and the first quarter of 2021. I don't know how this is possible, but their earnings is more than their revenue. I need to look more into that, but the company is now producing some great returns. As you could see, they're getting some cash on the books. But I think because of the coronavirus, this has pushed Shopify into the limelight, into the business world, competing with not only Amazon, but all of these other companies that are providing a storefront online for business owners. So I think Shopify is truly the way of the future. I can easily see this going to, I don't know, $3,000 within the next couple of years. That's my prediction. But let's jump on to Google. This one I actually recently added to my portfolio. Let's go back to my Ameritrade account. I have only 3 shares. I'm up 24%, and it's about $7,200 in it. So Apple, I bought at, the first time I bought was right about here, $1,700. I did have a limit order in at, let's see, we gotta go more than a year out. Look at this. So it dropped down to $168. I think during that day, it dropped down to $108. I had a buy order for $1,000, never triggered. So I said, whatever, didn't trigger, kept on going up. And I said, you know what? I really need to get into Google. I do think it's a great company. So I bought in for $1,700, and then I bought in again, maybe this little dip right here. I know it's kind of buying high, but it's all about dollar cost average, guys. But let's take a look. Google is just that monster that makes so much money. It's too big to fail, in my opinion. I mean, it's in everyone's pockets. You have it on your phone. You use it every single day. Everyone uses it every single day. You can't say that you don't unless you're, tinfoil hat guy using DuckDuckGo, which, hey, nothing wrong about that. I'm a little bit of a tinfoil hat myself, but Google is a killer company, and its books are just amazing. Financially, fundamentally, it is such a sound company. Great investment. My second favorite stock, Nvidia. I just posted a video about Nvidia. I got $7,100 in it, up 54%. Let's see. I have 10 shares. It's about to have a split within a month. I bought this one also back in like 2017. I think $168, something like that. Or you know what? No, I bought it during this dip maybe. 2000, I don't know. I bought it for like 100, and then I bought it again for maybe 400, and then again for like 500. It's going to have a split. And again, its profit just keeps going up. They are really benefiting from cryptocurrency with all of their mining rigs. You could check that video out as well. I go into more about Nvidia, but love this company, not getting rid of it. We jump over to Adobe, which is my next one. Here it is, market value almost $6,000. We go to Adobe, just a solid company overall. I think I bought in maybe in November or January. Recently I bought in, so I don't have that much of a profit yet. The past year, it's been in this channel between $400 and $600, or more like $400 and $550. But overall, just a solid company. It makes really good money. It has low debt, I believe, a decent amount of cash on hand. Great company. Next one is Facebook. I think this is the most undervalued stock. I got $5,900 in it. I bought Facebook. I bought it back in 2017, again during this massive dip. I think again over here. I've just continued to dollar cost average into Facebook. I mean, I'm not the biggest fan of Zuckerberg as a person. Love him as the CEO. I think he's a great founder, great businessman, and by that, not necessarily great at making money, but great at delegating and getting the right people in place to make him money. Again, just this monster making a lot of money, probably the best competitor for Google. That's what I like. Facebook and Google are two biggest competitors against each other. I could own both of them. So if one wins at the end of the day, I'm still winning. Doesn't matter who wins. Next is SPGI, Standard & Poor's Global Inc. It's a bonds rating company. It owns the SPY. This is a great company just to own. It's a conservative company in my opinion. It has been around since 1981, and it's just been making some great returns. I mean, it's nothing crazy, $6 billion in revenue, right? It's not like it's Google making $150 billion. But it's just a solid company that makes really good money. It has high profit margins too. And I just like the fundamentals of this company. Next, we have Square. I think Square is also, right now it's overvalued, but long run, I think it's very undervalued. I bought Square at the start of the coronavirus. Well, not even a start, back in January, $69. It's now trading at $219. It's got a, it's still growing, so it's not making the most money right now, but I think Jack Dorsey is a great CEO, and I mean, they're making a lot of revenue. So I think it still has a lot of room to grow. Still a new company, only been around since 2009. I have high hopes for it. Next, we have Etsy. I have a love-hate relationship with Etsy. I do have $5,800 in it, and if we check out the chart, I mean, it has wildly benefited from the coronavirus. As you can see, it just shot up. It is making good money, but I have a lot of negative things to say about Etsy. I was selling something on Etsy, and then they banned the store. There was no copyright reasons why they banned it. I don't know why, and apparently a lot of people have these problems on Etsy, so they really don't look out for their sellers. They look out more for their customers, and that just kind of doesn't sit well in my mouth. I mean, it has made me great money, but at the same time, this might be one of the first companies I would sell if, it keeps doing stuff I don't like. Right now, I'm still going to keep it, right? Still have long-term vision, 10, 20 years down the road. I would like to hold these stocks for as long as possible, but anything could change. Something goes wrong, then I don't have any allegiance to these companies. I could easily sell it and then put it into a different company. But so far, everything has stayed the same. We are jumping over to Microsoft. I would say this is now a safe bet, conservative bet. Your grandma should own this. Everyone should own Microsoft. I mean, look at this. Just a solid increase for the past 5 years. We all know Microsoft knows how to make great money, and they are in everyone's home. So overall, great company. We're moving on now to Intuit. TurboTax. They give out loans as well. They own a couple of other stuff. They own QuickBooks. So Intuit, I think, is another solid company. They know how to make good money. It's a nice bet. Intuit is going to be around no matter what, whether we're in a recession or we're in a boom. It doesn't matter. You need to file your taxes. You need stuff like QuickBooks if you're a business owner. Great company overall. Financially, some people aren't the biggest fans of it socially, but that's a different story. We're about making money here. Next is Apple. I mean, who doesn't own Apple? I have been holding on to Apple since 2017. It's just a cash cow. It knows how to make money. I don't think I really need to explain too much about Apple, but overall, great company. So I think we all know that. It's just another conservative bet that's in everyone's pocket. Visa. Visa, I think, has a long way to go. I think it's going to continue to go up over the years. I mean, it's been doing really well, but I think Visa's taking the right steps to prepare for the future. They're actually getting involved in crypto indirectly. They're providing all the cards to all of these crypto places where now people get not cashback rewards, but crypto rewards. So they're kind of indirectly involved in crypto that way. I think they're taking the right moves because I do think cryptocurrency is going to take a huge push and into the mainstream as it already is and take over the world, but that's a video for another time. Last is Netflix. So this company has done really well for me. I do have 11 shares, but it is my smallest position now, 5,300. I think at one point it used to be my second biggest position. Overall, I mean, the company makes a lot of revenue. It doesn't make the best earnings, but that's because they're a very, very aggressive growth company. And I mean, it's tough. I do think that it will hurt. The company will hurt if we do enter a recession. But at the same time, it's so cheap where I don't think it's going to go away. Its price just may drop a lot. So, yeah, it was a great company, the past decade, without a doubt. This next decade, I think it's just going to be a solid company. It'll still outperform the market, at least in my opinion. Time will tell. But, I mean, I don't think it's going to make as much money as other companies like Nvidia, Google, or even Apple or Microsoft. But, again, I think it's going to be a good company, so that's why it is still in my portfolio. And I plan on holding it for a very long time. But now those are my 14 positions with an update, what I think about all the companies. And lastly, what I want to go over is I am starting to get into cryptocurrencies, as you guys should know if you've watched any of my recent videos. So I do have some money now in Gemini. I think Gemini is a really good platform to buy your cryptocurrencies. I'm not sponsored by them or anything, but I do think the Winklevoss twins, they're great guys. They have a very nice UI. Want to go over that portfolio. And then the last thing, after I go over this portfolio, which will be really quick, there's one stock I have my eyes on that I may add to my portfolio, so make sure you stick to the end. So here is my crypto portfolio, a tenth of the size, $10,000. It has been going down for the past couple of months. But right now, Bitcoin is kind of in a little bear market for the past couple of months. I do think it's going to skyrocket in December. Time will tell again, but Bitcoin is my largest position of 52%. I got 0.149 Bitcoin, so not a lot, but still a decent chunk of change. I do have a couple, well, not a couple, but 1.5 Ethereum, a couple Litecoin, Aave, Chainlink, and Bitcoin Cash. Pretty much these 3-4 coins I will be selling. I'm just kind of testing them out. I think if there's another altcoin season, it could have a nice run up. My goal is to profit off of that run up, sell them, and then drop it all into Bitcoin. And eventually I will probably sell my Ethereum for Bitcoin. You could call me a Bitcoin maximalist. I do think that is the end all cryptocurrency. So my goal eventually is to just kind of take all of my earnings that I make across the altcoins and just siphon them up to Bitcoin. My goal is to own as much Bitcoin as possible, because I do think it is a great hedge against inflation and all of that stuff. But here's the last company that I may be adding to my TD Ameritrade portfolio. We need to see a pretty nice dip in the market. I want to see a recession, and I am jumping into Msci. Don't want the video to be too long. Maybe I'll make a video that goes in depth about this company, but overall, I mean, you could read right here. You could pause the video and read. It's an American finance company headquartered in New York City. It's a really strong company, guys, and over its lifetime, it has made some solid earnings. Just look at this exponential curve. I mean, regardless of what the market is doing, this stock is just seeing a beautiful curve up. Its financials are nice, and it knows how to make a decent amount of money. I mean, it's a small company, guys. It's only making $1 billion revenue, $500 million profit. Small company. Where's its market cap? Yeah, $39 billion. So, I mean, it's not even $100 billion. It's funny, $39 billion, rewind 10 years ago, it was a massive company. Not so much anymore. It's a small company. I think it has so much room to grow. So I do think it's a great bet, but I do want to see a nice dip in the market. Then I'm jumping into this stock to add it as my 15th position. But guys, that is my portfolio. Next time I'll do this, maybe it will be when I'm at $1 million, maybe 250,000. I don't know. But you guys seem to appreciate when I show my portfolio. You know what I'm doing, so you can determine, hey, is this guy good at investing? Does he know what he's talking about? And do I want to listen to him? So that's it, guys. That is my portfolio update. Hit the 6 figures before the age of 26. If you like this video, make sure to smash that like button, subscribe if you haven't already. And as always, guys, I will see you in the next one.